It has been a tough year for EM countries and their currencies due to a strengthening dollar and record-breaking outflows. But after this week's EM rally on the back of US fiscal shutdown, the question of whether or not there is more to come depends for many on why they turned around. Joining me down the line to share her insights is Merina Willemse. Merina, to understand the reversals, do you think global EM demand is purely based on EM growth, lack of developed market growth and ultra-easy money, in which case reversals are inevitable? Or do you believe the drivers of EM bond markets are more structural?
Well, at this point in time, we essentially believe on the longer term, the reasons why EM demand should be sustainable is because fundamentally and economically they're just healthier. So I think over time, in the longer term, as we see perhaps a great normalization in what's going on in the global developed market space at the moment, they can prove to grow more sustainably and develop even further. So it doesn't mean that there's no potential for emerging markets to play a very important role in the global economy in a few years' time. But until then, we have a very unorthodox way that things are being handled at the moment, specifically looking at the US and Japan, for instance. The incredible amounts of monetary stimulus within those economies have certainly caused a lot of misallocation in assets, we could say. Essentially, the movement within markets has been structural at this point. But we do believe that over time, and as things should return back to normal, the much more fundamental and way of allocating our assets throughout the economy should persist, and that would probably point to money flowing back to the emerging markets.
The political crisis in the US has helped the recent turnaround. If the US economy has been damaged by political uncertainty and the partial government shutdown, the Fed is likely to delay its tapering further. Even as the government reopens, it seems merely a case of kicking the can down the road. Either way, dollar strength, if it is to come, will be delayed. Despite the uncertainty, is this good news for EMs?
It could be good news. Of course, there's a lot of uncertainty placed back on the table, despite the fact that the Fed has been very certain about some of its moves during 2013. I think the uncertainty might, to some degree, help the emerging markets again and cause a little bit of money to flow there. But as long as you see the yo-yo game being played by the Fed, it's probably going to be a little bit of a rough ride for emerging market economies. At this point in time, all of the market analysts, everybody everywhere would like to try and get an idea of exactly when tapering should start, and by doing that, places a lot of certainty back on the table. But of course, this will probably be the one uncertain point that might cause the emerging markets to still suffer in the short term. At this point, if tapering is set to start, and we have a specific date, maybe December or March next year, again, the emerging markets might feel the pinch.
As the US Fiscal Deal was struck, the South African rand led the rally in EM currencies. Looking more closely at the country's fundamentals, what is your outlook for the ZAR moving forward?
Well, again, very much underpinned by what's going to happen in the American monetary policy over the next few months. Our forecast on the rand is for it to continue strengthening very slightly towards the end of this year, and perhaps again weaken again later on next year. Of course, it can swing around with what's going on, what might happen in America, and the rand is one of the most volatile currencies, so it's very difficult to say. Essentially, I think in the longer term, there are a few things that point to a weaker rand from a more fundamental South African economic basis, and so we do forecast in a little bit of weakness in the rand going into 2014 again. We still have an incredibly large current account deficit and many other structural problems that risk us facing another significant degrade in our current rating by some of the rating agencies. So all of these things do not favour strengthening in the rand over the longer term.
Merina, thank you so much for your time. Well, viewers, that's all for the moment, but as the US government opens, click back to Dukascopy TV for today's press review focusing on the temporary fiscal deal. Goodbye for now.